according to the BIS, if you bought Bitcoin last night, you probably are down bad, which is a pretty fair assumption. According to this new banking report that came out Monday, the BIS looked at a bunch of different exchanges, a bunch of different people who are buying Bitcoin across different jurisdictions, across different income levels. They found out that most people who are minnows in the sea of Bitcoin and crypto probably sold into losses last year, while whales typically were gobbling up and selling these large portions for USD, and we're okay. There's a few assumptions in here that we should definitely unpack, and we'll get to those in a second. But I do want to get this headline over to Zach just to start, because it is an interesting thing to see in terms of like crypto's adoption narrative, right? If we have a bad year and prices go down, people take losses, it kind of hurts the ability for people to want to buy in next time. And this number really looks rough. Zach, throw it up to you.
Picking on me? I thought this would be a Wendy one. You know, Wendy's out here trading this stuff actively. You know, she's probably not losing, but I mean, sure, this is the BIS. The BIS loves making headlines like this. They're out here saying crypto's bad, it's the small guys who are getting hurt. Yeah, DeFi's shady. I know we get it. So I'm having a hard time overcoming the messenger in this one. But I don't know. That's all I got. I'm going to toss this to Wendy. She's probably got more sophisticated trading thoughts on this.
I think that we should take the I out of BIS and just leave it as BS in this particular case, because Bitcoin has outperformed quite a few traditional assets. And I talk about this all the time on my show. I look at my 401k when I had my 9-to-5, when I was working in healthcare, I was actively contributing. The amount that I had when I left in 2017 is the same that I had, if not lower. And the Bitcoin that I bought in 2017 is up significantly. So I understand their concern. I know they want to FUD our bag so they can continue to buy it at a discounted price. But realistically, yes, we have had a bit of a hard, bit of a rough patch, but that also can be attributed to lack of regulations from our public servants and lack of creating any sort of guidelines for people to operate, especially crypto exchanges in the United States of America. But I personally think that Bitcoin is going to be fine. And those people who are actively investing and do have a trading or investing plan, they'll be okay too.
I don't think there's an ulterior motive at foot. I mean, I think these are just raw markets, right? Like the markets tend toward, I guess, professionalization over time. And maybe that's what we're seeing here, right? Retail investors getting burned. Obviously, someone else in the market is potentially profiting. Maybe that's just the way these markets work. But hey, I don't know. I'm no economist.
Or the data that they're presenting is skewed. Sorry, I had to say that.
No worries.
Yeah, on the data here. Oh, go ahead, Anna.
Sorry, I just wanted to note that there is one more interesting thing about this BIS report, that they also underscore that it was the developing countries, not the richest countries in the world, that suffered most from the crypto, from the FTX collapse this year. And I think this part, is kind of a useful reminder that crypto is a complicated industry, right? It's a complex industry, and at the same time, it's kind of lucrative. The stories that your friends got crypto rich and you still haven't. I think it's a repeating and kind of worrisome stories that the most, kind of financially disempowered maybe and not the most financially savvy people that they get caught in between cycles and in big crashes like the FTX one.
Yeah, I think that's some good points. And just to respond to what Wendy was saying, I think it does depend on like the numbers themselves, right? So BIS looking at this, they basically looked at the market in general. They picked a few different statistics in order to make this whole report. So they included like the number of people who had downloaded a Bitcoin application that allowed them to buy Bitcoin. They looked at exchange volumes during peak periods, and they came up with this rough estimation about how much money did an average retail user lose in terms of Bitcoin over 2022, and how much did a whale sell into that market. It's fair to make those assumptions, but it doesn't really give you great data on a granular level. That being said, I think it is important to note that this headline does ring true for many people. A lot of people did lose money last year. They lost their Bitcoin because they didn't know how to hold it. They sold into a down market because they were scared, or they swapped into another crypto asset that went down even further because they were unsure what to do with it. I think that's just like sort of the walkway from me here is we all know that Bitcoin is cyclical. We all know that Bitcoin goes up and down. But for people who got into the market a little bit late and got burnt, we might not see them back for quite a while. And that just plays more into like this long cycle theory that Bitcoin comes around every 4 or 5 years, because it takes a while for people to forget what happened during the last cycle.